Hi, it's Mike Palmer with Group 1 Trading. This is Volatility 4-in-1. After a tumultuous week in the market, we saw a big sell-off on Monday last week, and then we kind of quieted down on Tuesday and Wednesday, and we saw more selling off on Thursday and really accelerating into Friday. We actually had a kind of quiet start to this week, considering how we ended last week. We saw the S&P 500 down as many as 70 points on Friday. We saw the VIX pop all the way to about 18. We have pulled back and, in fact, probably pretty much shrugged off those worries that were primarily based around the coronavirus in China. We've shrugged that off. We've seen markets hit new highs. We are seeing some tumult in the Chinese markets, but generally speaking, things have been quiet here. That said, only yesterday did we move out of really what is technically a backwardation market. That is where the front month future is trading over the second month future. Right now, that spread between those is only about 35 cents. That is, the front month future is trading about 15.65, where the second month future is trading 16. That is what we typically see in the markets. That's referred to as Contago, but I'll tell you right now, that is a pretty flat term structure overall in VIX futures. That tells us that perhaps this volatility in the market is not over. This can also be evidenced by the fact that we're seeing the VIX trading still right around 15. Right now, it's just below 15 at 14.95. That implies a market move in the S&P 500 in the high 20s, 28, 29, wherever you want to call it, somewhere in that area of a daily move in the market. We are not moving that much right now, and that means that there's some volatility left in the market, people saying that perhaps this coronavirus really picks up and accelerates and causes some market tumult. As it is right now, though, we are not seeing that happen in the market. The market has been, generally speaking, quiet this week. We did have a big trade today. We saw a buyer of the March 25 calls. They paid 47 and 48 cents. They bought a total of 100,000 of those calls. That, again, is that 50-cent activity that has become famous, where the trader buys an option somewhere between 4 and 6 weeks out. He buys in a lot of size, and the price is always in the vicinity of 50 cents. In this case, 47, 48 cents. He bought 100,000 of the March 25 calls. That's what's going on in the VIX. This is Mike Palmer with Group 1 Trading. This is Volatility 4-in-1.